In this episode, you will learn how a 5-time founder backed by Accel and Seedcamp decided to shut down his business. My name is Alexei and I help founders scale. My guest today is Matteo Grassi, and he raised $3.5 million from a bunch of amazing backers: Accel, Seedcamp, Harry Stebbings, 20VC, Sam Parr Syndicate, and a bunch of other amazing angels. Today, we'll find out why he shut down his business. Matteo's latest business was called PopUp, an innovative content management system. He was going head to head against Shopify ultimately. And we learn also how important community building was and how important ultimately numbers are in the VC game. So enough of me rambling now. Let's dive in. Hi, Matteo. Excited to have you here.
Hi, Alex. Excited to have you here as well. I've been hiding for the last 3 months, so
Cool. Yeah.
It's nice to be first podcast after I think 4 months.
Perfect. So honored to be given that chance.
Same.
Awesome.
Same.
Cool. So just for the context of the listeners and for the viewers, you are a 5-times founder, and your 5th business, PopUp, was a very innovative content management system, which raised more than $3.5 million, scaled to more than 40 people in the team. And as of, I guess, a month ago, the business actually got shut down, right?
Yeah, correct. Yeah, we decided to not move forward anymore. I mean, we just ran out of money. We couldn't secure more funding. We tried. We fundraised for about 6 months. I think we saw an opportunity maybe to secure more funding, but it wasn't. It was just basically prolonging a death that it was going to happen now was maybe it's going to happen in the next 6 months, 7 months.
Yeah. So better quick death rather than death by 1,000 stabs, right?
Yeah. But we also wanted to get right from our employees as well. And it's like, running out of money, to the end and not even being able to give any severance to the people. It was wrong for us. So we decided to do a little bit before. We didn't have time to pivot, and we didn't have time also to explore an acquisition. Because I think if we decided maybe 8 months ago, we probably would have been able to be acquired or have an exit, because we were talking to some people at the very end, but just the timing wasn't there.
Yeah. So before we jump a bit more into that, because it's very rare that founders talk about, how a business actually got shut down or how they decided to, close the business. Let's maybe start with your founding story and what the actual benefit of PopUp was.
Yeah, so we had a portfolio company of different e-commerce brands, meaning that we were actually building brands, building products. We had fulfillment center. So we were like merchants, basically. We noticed a problem while we were running our own stores, which was kind of a problem that we noticed while we were working in Shopify. So there was a lot of conviction because of our experience in Shopify and also running our brands ourselves. And we thought maybe we could approach commerce in a different way. Maybe the system or the way things have been done has not changed for a long time. And maybe we can propose a new approach. And not just like building a Shopify app, but basically reinventing how commerce is made and creating a new e-commerce platform. So initially, PopUp started as a flow builder, right? And we explored the possibility at the very beginning to become a Shopify app. And to be a Shopify app, we realized that we could not be a Shopify app because the whole concept of controlling the customer journey was starting from the start of the customer journey to the end of the customer journey. And the end of the customer journey is the checkout. And if you cannot control the checkout, then the whole concept goes away. That's the moment that we decided to raise capital. To be honest with you, if I'd done a Shopify app, I wouldn't have raised capital. We had money from our past venture. we bootstrapped PopUp for 6 to 7 months before we raised. And there was no point. And this is, again, I think, is like a lot of people say, oh, should I raise, should I not raise? It depends on the size of the product. I mean, if you're building a Shopify app and you can do it yourself, maybe you shouldn't raise money. And a lot of venture capital were like, hey, maybe you can turn PopUp into a Shopify app. And I was like, well, that's the reason why we raise capital, not to be a Shopify app. We embarked on this journey but it was I was really naive in terms of like, I didn't know, I knew zero about venture capital, and my business partner knew zero about venture capital because we bootstrapped businesses in the past. So I was a 5x founders, but I consider now myself first-time founder because being a founder bootstrapping is different. 100%. And that was, I think, one of my maybe short sight or not mistakes, but thinking like, hey, I've done businesses before, I managed money before, but I always operated on profits. It's like you make money and then you spend the money and then your objective is making money. I never operated on, they give you money and then you can show profits whenever, maybe in a year or two, and then you just focus on building the products. Is a completely different mindset, and I think that's what a lot of mistakes were made also because of this.
So maybe going back one step, and you saying you had an e-commerce business and various brands, and then you decided to actually go into software. Why did you decide to go from e-commerce into software in the first place?
I think the challenge, is like you reached, as an entrepreneur, I think you always reach a plateau. And if you're not there for the money, which you shouldn't be there for the money. I mean, it's money. Money is great and is a way to move forward and building things, but it shouldn't be the objective to me. Myself and Corey, my business partner, were like, do we really want to do more of this stuff? I mean, we've been doing it for the last 10 years. Wouldn't it be exciting to build a company where you empower other people to create things? And this is where I think PopUp was such a challenging product, because it's what is called a prosumer company, right? A prosumer company is where the user is also the producer.
Right.
Figma is a prosumer company. Adobe is a prosumer company. Notion is a prosumer company. And prosumer company takes a long time to find product market fit. It's not like, I don't know, a Lemlist or a email marketing tool where, you just write an email, send it to people, that's it, right? With PopUp or like with Siemens Notion, you can really create anything you want. And so when you give the possibility to people to create anything they want, the question is like, what problems are you solving? I don't know. You're not solving one problem. You're solving an array of problems because everyone has different way that their imagination works. That makes it really hard to find your initial ICP. It makes it really hard to find product market fit. And then if you look at a company like Figma, I think they went out of beta on their Series A. I think their first customer was like, took so long for them because they needed to reinvent the whole design system. And this is the vision that we had for PopUp too. But to have that, you need to have, I think, investors that believe in the long-term vision. And investors did believe in our vision, but the market changes as well. And when the market changes, then companies like PopUp are not as seen as good as in 2021, when people back in like big vision, moonshots, right? PopUp was kind of thing that if it works, you go IPO and you're going to basically challenge Shopify. If it doesn't work, you crash. But when investors get weary, and it's not VC, because at the end of the day, VC responds to their limited partners, right? Then building conviction is really hard because our MVP was just too big. We couldn't build a product that was able to serve 100% a small segment of customers in the time that was given to us. And that was the problem.
Got it. So You mentioned you initially bootstrapped PopUp with the proceeds you got from the previous business, and then you decided to raise. How did you go about the raise? Who invested? Like, if you can, name or mention the name of
Yeah.
the VC.
Yeah, of course. No, it's all public as well. It was 2021. We approached for the first time raising capital. We were very lucky to meet Anthony Dannon, which is one of our first angels, and now he has a fund called Coco Ventures. It's a micro fund, and he's an amazing human being, and he was able basically to guide us and give us a lot of advice in terms of like how much to raise, what signal you have, equity targets. There is a fundraising strategy. Fundraising is a strategy, and I think if you want to actually read a good book from one of my investors, which is Carlos from Seedcamp, he wrote a book called Field Guide to Fundraising, and I think it's a great book. 2021 was a year there was a lot of money coming up. And we came out as these guys from nowhere that had 20 years in e-commerce, worked in Shopify. We had an amazing deck. And we were like, holy shit, this is big. And we got people excited, right? And for the first, I think, month, nothing happened because our main mistakes was we were asking for too much money. So what was happening, we were initially raising, I think, 4 million. And that money was pricing out a lot of venture capital.
Right.
That were focused on pre-seed, for example, right?
Yeah.
Because they can write a maximum amount of check, they have equity targets, and they were like, we cannot do this, right? It's just too much. Or it was like, for this amount of money, we wait for Series A, right? We didn't have any traction. We had basically a very small MVP and a pitch deck. So what we did, we shrank down the raise and we said, okay, let's raise 2 million instead of 4, because and then allowed us to found a lead investor that was able to put like $1 million, for example, and lead the round. So once we did that, Seedcamp came back to us and said, okay, we were always interested in you guys. It's just like we couldn't enter in that round, but with 2 million, we cannot lead, but we can make a hard commitment and send a signal to everyone else that we want you. That completely flipped the script. Like that moment, because we had a very tier one fund that said, we believe in these guys. And I believe that fundraising a little bit like a class or a dance, when there's no one dance and then there is a person that comes in and rocks the floor and everyone dance, right? I think that's it. So a lot of founders, I say to them, is like, don't lose time to contact 100 people. Maybe just find the lead investor, because if you find the lead investors, you just find one.
Yeah.
Finding the others is easy. It's super easy. And so when Seedcamp came, that's it. And we got the FOMO. We got the FOMO going. And then Seedcamp came, and then I don't know, a ton of people arrived. And then everyone was like, oh, I want in. And basically we ended up that at the time we could have raised $10 million. If we wanted to, we could have raised $10 million.
Wow.
Because everyone would just wanted to give us money, especially when Accel came in. So Accel came in and it said, we went in. And we were like, guys, we don't have any space. Because at the time, the round was actually already full. We didn't have a lead. It was more like a party round. It was like Seedcamp together with 20 VC. And then we had other funds coming in. We had Sempar with his syndicates. So everyone was putting money in, and we basically closed at 2 million already happy outs, right? So Accel came in and is like, no, I want in. And that was the time where we Accel, there was a lot of back and forth. And we said no, and they were like, oh, we really want in. And our main concern, which was actually advised to us, it was Accel is a multi-billion-dollar fund. They do not do many pre-seed investments. And the risk that you have with Accel is that if they don't invest in you in the next round is going to give a bad signal to everyone else. And then the possibility for you to raise are going to be very, 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 very low. So it's a risk. I mean, good side, you have Accel on your cap table, meaning that, I mean, it's Accel, right? The downside is that that might screw up in the future. So we thought about it a lot. And then I think what moved the needle and we decided to bring Accel in, it was the idea that Accel might not be the right fund for pre-seeds, but for the company that we're trying to build, having a multi-stage fund that is going to support you to pre-seed, seed, and Series A, even though you are building this massive product, that's maybe what we need. Very similar to the Figma story. And so we extended the round. So we brought from 2 million to 3.5. So Accel could come in. And Accel came in. And then we kept the group of people that we had. So we had Seedcamp, we had 20 VC. Then we have Sempar with his syndicate. And then we had a few angels like Johnny from Hopin. We had Alex from Linktree, Kieran Flanagan. We had... just like 3 or 4 other angels.
It's like an all-star cap table. It's an all-star.
Oh, it was a really cool cap table. Yeah, but man, it was insane. It was 2021 was a time that once Accel came in, I had calls with venture capital, and they were like, "You guys closing?" I was like, "Yeah, we're kind of closing." And who's your cap table? Oh, it's Accel. And they were like, "Oh, can we give you 200,000?" I was like, "Do you want to know what we're building?" I was like, "Oh, no, it's fine." I was like, it's like
the
people throwing money at you.
Third behavior, yeah.
To me, like someone that bootstrapped and it was like struggling constantly, having people to beg you to give you more money, and they were like, "I want to give you more." It's like, "No, I have 20,000. I can't give you more than 20." It's like, "This is the thing." It's like, "No. Can you do 50? Can you do 100? Can you?" I was like, "This is insane." And so we closed the round, Accel led, and then we started building. We started building.
And then, okay, cool. And I guess like a big part of your building was also community, right? You created e-commerce minds, which is a very active WhatsApp community.
That came after. I think if I had to go back, I would not do. I wouldn't have done any of this. I wouldn't have done the community. I wouldn't have done any marketing. I wouldn't have done any MAs. I wouldn't have done any documentaries. I wouldn't have done anything else. Because that's what also investors were not really pleased about, right?
Interesting. Because you were distracting yourself, basically.
Product. It wasn't a distraction. I think it was they wanted to see the products. So marketing and product it's like, what the hell you are pushing marketing, but any of this is not converting into customers because the product is not ready yet. Right. So my argument was simple. It was like, we're not spending a lot of money to do this, first of all. So it's not a major investment. It's not like I freaking hired, 20 people in my marketing team or, and also I'm a marketer. So I cannot build the products, it's just like, Corey is head of engineering, my co-founder. He was managing all of that. And there was not much I could do. So to me, the best use of my time was started to creating some sort of fertile ground to be able to then focus on organic acquisition, because I knew that competing on a performance marketing in e-commerce, it was going to be like, we're never going to have the money. It's like just too expensive. Yeah. Companies like Shopify just dominate the keywords. So to me, it was like Google Ads, forget about it, right? So it was like the best thing I can do, because we wanted also to build. This is another thing that I think investor never got. And I was fighting, I think, a lot on this. It was like, I know you're thinking we're building a B2B company, but in reality, PopUp is a consumer company, because Shopify was really successful because they built a consumer company, not a B2B company. Shopify Plus B2B company, but the money, when they started, they were selling entrepreneurship. So they were selling for people that starting out, people that wanted to buy the dream. It was, and this is why you say, I have a Shopify store. You don't say I have a WooCommerce store, right? You don't say I have a Wix store. You say I have a Shopify store because Shopify equals entrepreneurship, right? And this to me was like, maybe we'll start with that. And also I knew that in acquisition, I wanted to focus on partnerships, because the biggest challenge for me for PopUp was being an e-commerce platform. So being an e-commerce platform was the biggest challenge in terms of building the product, but at the same time, it was also our biggest opportunity, because we don't have competitors besides Shopify. So we can tap into the Shopify ecosystem, and I can go to agencies, I can go to apps, I can go to anyone. Anyone can build on Shopify or on PopUp. And so to me, creating a partnership program was basically our way to acquire customers without spending any money.
Yeah.
To create a partnership program, I was like, maybe I'll start creating a community, because the community will allow me to bring in people, and start connecting with people. So when I'm ready, I can just click my finger, in a month, I'm ready to go. And I didn't want to do a pop-up community, because I know that people don't like selling, it's like, so I was like, let's create just a community of people, ecom minds, and I'm not going to promote pop-up inside. Everyone can talk about themselves, but actually myself as a gatekeeper, by before entering the community, it's either you are a referrer or you're knowing. I basically start building this massive network, and it works, right? I had like people now that I could reach out to. And it was coming organically. People are like, oh, I love your community. Oh, I see what you're doing with Papa. Maybe we should partner. So partnership was happening even without me happening, right? But it was all too soon, because the product was not ready. And the more the team was building the product, the more we were refining the ICP, the more we were realizing that it was going to take a long time to be able to build a product that was able to cater for everyone.
Yeah.
And the biggest thing that we found out was people didn't want to use pop-up in conjunction with Shopify. And that to me was the biggest, was good. I mean, we discovered it from customers, obviously, but that to me was like, holy shit, now I have no idea we're going to do this. When that happened, I got really worried, because people wanted to migrate. And to be able to migrate, if I can use it in conjunction, we built like this connector that allow you to send order to Shopify. It wasn't like an app, but someone can come in, run an influencer collaboration, running some Facebook ad campaigns, and all the integration would fire with Shopify. But if I want to migrate my store, I need to have mostly all the integration that I have from Shopify.
Yeah.
To have all the integration, we need to build a public API, right? Do you know what I mean? And then it was like, okay, this is another 6-7 months before. And I had calls with people, like I literally we were disqualifying like 95% of people. And it was a shame, because they were coming in. It was like, oh my God, I love the Journey Builder. I love what you're building. Do you guys integrate with my fulfillment center? Like, no, not yet. Well, I can't move my business. It's like as simple as that. I love what you're doing, but I can't move the business.
Yeah.
Call me when you can integrate with my fulfillment center.
Interesting. So how did you explain it to the VCs? I guess you found out, let's say, a year before shutting down, and it's, in a sense, it's a good thing, right? It just means that people are not happy with Shopify. There is like, challenges in in the flow, for example, right, which affects conversion rates, and you build something better. And in a sense, venture capital is there to really back these moonshots, right? But of course, as you say, the sentiment changed, the environment changed. So how did it play out?
So Accel dropped us 8 months before we shut down.
But by dropping you, what like?
They said we're not going to invest anymore.
Okay, but it was during a board meeting, for example, right? It was a board meeting where you were giving your latest numbers. And then what happened? They just said, look, you need more capital, but your user growth is too slow. We don't believe in that story anymore, and we cannot invest. or how did they actually
No, I
create?
think they never. Accel said we're not putting any more money in. That's what they said to me. No, it wasn't a board meeting. It was actually a meeting with 101, and that was really early. That was a year and 2 months after we got funded.
Okay, but what was the trigger, do you think?
I personally think that the expectations that they had were very like it either they didn't. I don't think they understood the product. I just think they understood. I think there was a FOMO
Okay, got it.
at the time in 2021, and they didn't fully understand the scope of what we're building. And I felt that all the way through. And to me, because a lot of conversation were like, oh, but our portfolio companies are burning this amount of money and they have this amount and they have this amount of ARR, blah, 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 blah. So, and they're doing e-commerce. And I'm like, yeah, they're building a front end app for Shopify. This is like a fifth of our company. It's like we have to build the front end, the back end, the integration, of course they're doing that. But that, oh, but this company has this amount of engineers. Why do you have so many product managers? Because this company does compliance for freaking HR. So they don't need product managers because it's not a prosumer company. It's not that people are using the software to create things, right? Yeah. It's like they're working on one domain. So obviously it's very engineering heavy, while we have to have engineers, we have to have product designer and product manager because we have to build things. It's like, I remember talking, especially Corey, my business partner, talking a lot and like doing this. We were doing this graph explaining like, okay, these are like the 4 domains that we're working on and things like that. And it's like, I felt that it's like, they lost confidence. I don't know. Maybe they lost confidence, I think, in us as well. I heard a lot, for example, your burn is really high. We were burning 130K a month, but we had 40 people. Right? So a lot of things was like, your burn is really high, but yeah, my burn is high, but I have 40 people.
Yeah.
I mean, I know my burn is higher than the other companies that you're comparing me to that is burning 50,000, but they have 5 people, you know?
Yeah.
So I did.
Yeah.
If I go back, knowing all of this, I think PopUp would have survived by changing the product slightly and trying to cater for maybe smaller segments. So, for example, we saw a opportunity in enterprise. Even though PopUp was not born as a company for enterprise, we wanted to build a e-commerce software for everyone. And with enterprise, we probably would have become much more like a dev shop, like doing these very custom builds and things like that. But we got approached by Nike, we got approached by Nivea, we got approached by what else we got approached? The Batra Group, Alessi as well. And they all had like their own kind of use cases where they wanted to use PopUp in conjunction with their tech stack. If we had built less on trying to kind of not building this massive, e-commerce platform from day one, but maybe like a subset of that just for a tiny one, and then trying to get traction, monetization, and all of this, solving maybe one problem instead of trying to solve too many problems. And then from that, slowly moving into the rest, I think that would have been a much better strategy. I think that was our mistake.
And you didn't have that, let's say, epiphany back then, right? It's just now you're thinking it through and realizing.
Yeah, I mean, it's like, yeah, I mean, the enterprise play arrived while we were... it's a massive decision, right? Because you have a vision, you're building something, and you have to build something else. But on my side, there was a little bit of pride as well, because I was like, I believe in this product, and I have to change something because I need to show investor that
Yeah, I
it
get it.
didn't make sense to me on a product level,
I get it.
but it would have been a good decision for the investors. And so a lot of the times, personally, I don't know if other people were thinking like that. It's very hard for me not to operate from common sense, right? And
Yeah.
when I do things that don't make sense, it just really, because to me it's like it doesn't make sense.
Yeah, yeah, yeah. No. It's important to
Like
do, long-term sustainable decisions, even, and short-term just to raise a round, which then might have, then you just die later, right? Like, yeah, wouldn't have made any sense. But
like
yeah,
pop-up could be for the way to pop-up to go, we probably would have need another 10 million. And investors, like, honestly, it should have been the same story the Figba had,
okay,
but with a big risk that if we spend all this money and we arrive at this might not even happen. So instead of losing 3.5, we're going to lose 15 million if these guys can't make it,
yeah,
right?
yeah, yeah, of course. So
But I
what?
did feel I had a strong conviction. I had a really strong conviction from being in commerce from so long and with the community and people, just like from people from like, when you speak to Nike, when you speak to Nivea, and they were like, this is cool, this is really, really cool, this can
Yeah,
really happen. I started to feel like if we can just build this MVP that is so big, so a company that we can actually onboard customers fully and they can power 100% of people's business, I think we couldn't make it. Also because I realized that Shopify, moving people for Shopify was hard. I mean, we did it, but it was hard. But companies like WooCommerce, custom cards, oh my God, like for us, it wasn't like, hey, let's try to steal customer from Shopify. There was a huge market share that Shopify didn't tap into it that we could have got, all people that wanted to move maybe to Shopify wanted to use as an alternative.
yeah. People actually think Shopify owns 50% of the CMS market, but it's a much, much smaller market, right? It's like they own like 10%.
25,
How much?
25, 20,
25. Okay.
20.
I thought even less than that. And okay, fine. But then WooCommerce, how much does WooCommerce have?
WooCommerce 25 as well, 20,
Oh,
25.
25, 25. Okay. And then
But
you have like a long
it
tail, right?
depends on the region though. It
Yeah,
depends on the
right.
region. Like US, they would own 50%, while WooCommerce, for example, in Europe, much higher, right?
Yeah, right.
So,
Okay, fair
yeah.
enough. So, and then you have like a long tail, which you could basically, play in really well as well. So tell me
But in
about,
the top 100,000 store, I think Shopify is 25%. So I'm talking about, because 75% of Shopify store makes no money, right? So that we know
right,
we know that. So they
right.
make less than $1,000 a year.
Yeah.
Um,
Yeah. Because there's so many merchants who start selling something and then just shut down and, never make anything.
they're selling entrepreneurship a lot. They're
Yeah.
selling a dream, right? They're selling the guy that is like, oh, when I was working in Shopify, I had people calling me. They were like, I started I did like 3 months in support, which is amazing before I moved to Plus,
Wow.
because you really get to know the customer. And I had people calling me. They were like, you told me that I was going to make a ton of money with this. And, I started and my store is not making any money. And then I was looking in their dashboard and I was like, dude, you have no traffic. It's like, I was like, what you mean? I was like, it's like you have a store and you're complaining that your till is empty, but you had no customer entering in your store.
But your
And I was
store is
like,
based in
oh,
the desert, right? Yeah, absolutely.
exactly.
So okay, but let's go back for a second because it's just really fascinating, right? So Accel says no, and then what happened? So like the same way everybody said yes after Seedcamp said yes, everybody also started freaking out and saying no once Accel said no, or was there something like Seedcamp still believing in you and saying, look, guys, it happens, but let's try to find another lead for your seed round?
No, 100%, 100%. The thing is like, this is what I was saying in the beginning. If you get like if you raise a seed, for example, and you get like Seedcamp and you get 20 VC, those are pre-seed company. They are your first check and they don't do the second check. And you know this from day one,
Yeah.
right? So they know they're not going to invest in you again. Everyone knows. That's it. That's what they do. They supported us a lot. They work with us, and we started fundraising as well. We had an amazing pipeline. We spoken to 150 venture capital. I went to San Francisco as well to try to secure funding and everything. The issue is like we had people that wanted to put money in, but 2021 as well gave us a crazy valuation, overinflated evaluation, which was completely different from the evaluations that we're getting now. So we had to do a down round just because our evaluation was so overinflated. It was 22 million on a pre-seed, and now you had companies with a 14 million evaluation making 2 million ARR, right? It was like, for fuck's sake, it was crazy, right? So the valuation was really high. And it was really hard to find a lead investor. Also, we were raising a 5 million this time as well. So it was considerable. And we were raising 5 million because it was like, if we raise two, we're going to basically back in the same bullshit again, right? We just need to buy ourselves time. And we found a lot of followers, people that wanted to put 200, 300, 500, but they were like, we need a lead. We started, I don't think I can name them, but we spoke to two big tier 1 funds that seemed very interested, to the point that they arrived to do the due diligence with our merchants. And we had at the time, he moved on now, but at the time, the head of digital of Bayendorf, Nivea, using us as a reference. So yeah, they really chat with us and gave us a good reference on the pilot that we wanted to run with them. And also Goodbye Bread, which is another like a 3 million a year business doing amazing stuff. George was really kind to, create this case study. We had about 10 case studies as well published, and they disappeared.
And wasted your time, basically. Yeah. How?
I don't know, but I do have a feeling that the fact that a lot of people, it's not that I have a feeling, they told me, Signal, if Accel doesn't invest,
it's
why Accel is not investing?
Yeah, it's basically
it creates all this question. Why they're not investing? Maybe they know something that we don't know.
Yeah, no, absolutely. It's
and I had fans saying, just that to me. Like I had fans straight up. They were like, we are not investing because if Accel is not investing, we're not in. We're not in. And I got a few of them.
Yeah, and ultimately it's this advice you got early on. If you get Accel in and are not investing, it would be impossible for you to raise, right? Out of interest, if you
it would be really. They said it would be really hard if you add the facts of the market change. If you add the fact of also a shifting of, because obviously that's the way they explained it to me, which was actually really cool. It was like 2021, remote work, e-commerce, 10x evaluation, like 100x, boom, amazing. AI, and then you had crypto, 100x. And AI was like, yeah, who the fuck gives a shit? Like, no one cares about AI. 2023, AI, 100x. E-commerce, not that bad. It's just like in the middle and stuff like this. Crypto, forget about it. You're dead. It's like, the reverse of things. So obviously we saw a lot of shifts as well in funding into AI. So I think if I have to picture this, is like, okay, you have a company with an overinflated evaluation. The team is amazing. What they're building is really interesting, but it's a moonshot. But we want to allocate a lot of funds into AI right now, obviously, because this is where the future is. And this company does have an AI play. We don't have an AI play because we didn't make sense for us. We scoped it out, but was like, for us, doesn't make sense using AI right now, besides just like some basic things. And also overinflated evaluations as well. And and also the lead investor, which is Accel, which they should invest or at least do pro rata. They're not putting any money in. So, I mean, if I were an investor, I'd be like, no. And also, it was a really, really a buyer's market. It
Yeah.
means that there was a lot of deals going on. And
Yeah.
I have investors telling me, it's like, look, I have companies now. I just closed the deal of this company in e-commerce. They're doing 2 million ARR with a valuation of $12 million. And you're coming in with basically zero ARR, a 23 million evaluation. It's like,
Yeah.
why?
Yeah. Can I ask you one more question on that topic, which is
Sure.
obviously Accel has anti-dilution clauses in your shareholders agreement. If you would have, was there ever a discussion on, hey, let me do like a really big down round? I mean, was there ever?
Oh yeah, we went to the stream.
Okay.
We went to the stream. We went like I didn't tell this to anyone, but in November, when we saw that the things were not going good, I stepped down because we wanted to basically bring the burn to 120 to 70,000.
Mm-hmm.
Right? So the idea was, let's bring the burn down to 70,000. Let's try to get a bridge that with our current investor that they can put like maybe 500,000, 700,000. That will buy us 7 months to finish up few things, because we were about to launch Admin 2.0, which was going to allow us to lower our disqualification rate significantly. So we can get more traction and at the same time either exploring a acqui-hire in case things go shit, or we can just basically have more time to fundraise. So when I started thinking about this with my business partner, I was like, okay, so let's look at the team. Who we need to let go? I was like, well, all marketing. Because we just need to focus on product. Let's just get this stuff finished.
Yeah.
The community is there. If we want to kick stuff marketing, it's really, it's not, we have done a lot of groundwork right now. We can pick up the groundwork and then get it back up. So who was marketing was me and other few people, and I was quite good paid. So I was like, well, if I have to cut the first person, it would be me. So I was like, I will stay with you, obviously, fundraising as a co-founder to, it's not like, oh, I'm leaving and doing something else, right? It was like, I'll stay, but not doing marketing. I'll stay just with you, Corey, and help you out and figure out all of this and being in meetings and stuff like that. But I'll step down. And then I let go all my marketing team before we shut down. I let go all of my marketing team, and we went to the investor and I said, Matteo, step down. And we brought the burn down to 75,000. Can you help us out? And everyone said no. So when everyone said no, Corey called me and I was like, look, I just called with investors. And actually Corey as well, this is actually kudos to him. He said, I'm cutting my wages off. Like, it was like, I'm just going to cut basically my wages. I think it went down. I said, I'm just going to pay myself, I think, $2,000 a month, just literally so I can barely live, to be able to do this, right? So he cut his wages off. We couldn't cut people's wages off because they were already expecting raises, which we never gave them, right?
Of course. Yeah.
So, and then, but obviously we were very worried as well, because, okay, it was like, okay, we're cutting everyone off, but then we're going to lose engineers, obviously. Maybe we're going to lose people. But literally that was to us, that was the last straw. It was like, more than this, we don't know what to do. But when basically everyone said, nah. And I think that moment I realized that probably they gave up on us without telling us. They probably gave up on us a little bit before that. They write us off. It was like, and I think funds work like this. I don't think funds. The objective of a fund is reporting.
To double down on the winners, and that's exactly the risk. If you
It's
become
making money.
an orphan company, nobody gives a shit about you anymore, and it's a bad signal.
Yeah, you're part. Yeah, I mean, I think an objective of the fund, I don't see. I don't know. This is just every opinion is just mine. This is, I think, what I've seen and what I perceive. But I think the objective of a venture capital is not to make a company successful, is to return money to the investors. And it's different. I know that you return money to investor if companies are successful, but they don't give a crap about your company. You are part of this bubble. And then if the return of investment comes from two companies that go IPO and the rest die, who gives a shit? I mean, it's like, I done my
Yeah,
job. The
that's
investor
true.
got the money.
Yeah, it's portfolio construction theory. Yeah,
But
absolutely.
it is what it is, right?
It is. Yeah.
It's fine. Like it is. It is like it's their objective, right? That's what they're there.
So let's say for other SaaS founders, right? Like, what would be your advice, knowing now what knowing now what you know?
Yeah, so I can give advice that was given to me while I was in San Francisco, which was actually really, really good. A lot of VCs, venture capital, they gave me this advice. It's like they're like, capital is really expensive right now. Things have changed. Don't go, if you're starting a company, especially on pre-seeds, bootstrap or do an angel round. Don't go venture. Don't go venture. Like venture with, I'm raising with a pitch deck. Forget it. If you get it, you're gonna get like a super shit deal, right? So it's like build, do an angel round, don't go venture capital. Once you have enough ARR and the product market fits, then that's maybe the time for raising money from investors. And this is what I heard a lot.
So you're obviously an entrepreneur, so you never give up. What is the next step for you? What are you building now?
So I wasn't planning to build anything. I was I set myself up as an advisor for startups just because I started like maybe last year in companies like Meander and Mentor Cruise and just helping people just for free. I didn't ask for anything, and I really liked I really like helping people in terms of like telling my story as well and telling my learnings from fundraising strategy to growth to, because I have the bootstrapping mentality, but at the same time now I also raise capital. So helping founders as well on a mental health level and managing their life and trying to be trying to build a business without sacrificing. I was speaking just to a founder yesterday and it was like, I hate what I'm doing now because I'm not a 17-hour work day type of guy. It's like, I love the business, but it's like, it's just sucking up so much of my energy and time that now I hate it. So maybe that helping funders on that. But I have a project that started to me as literally as a, not passion, not even passion. I was just trying to solve a problem. So I was diagnosed with bipolar about 4 months ago. I always knew my dad is bipolar. I always knew that there was something there. And I think being an entrepreneur, I kind of hidden that because things of bipolar are over resilience, hyper focus, and manic phases where you can just basically work 20 hours a day without never giving up. So it's like perfect, right? I have all the conditions to be that, but at the same time, you pay the price afterwards, right? And yeah, so I was it took me like 4 months to find a psychiatrist, even paying for a psychiatrist. And when I got the psychiatrist, I basically got a prescription, and that's it. I was sent home, right? And I was like, holy shit, is that it? It's like a psychiatrist is just basically a pill dispenser. And so I thought about using artificial intelligence and machine learning to maybe creating something. And I just hired a developer at the time and put together like a WhatsApp bot that you can get information about bipolar. And then I was speaking to a friend of mine that is bipolar too. His name is James Roycroft, and he's been working with mental health as well. And we decided, like, oh, maybe we actually can build something a little bit more. We got approached with some psychiatrists. So we decided to basically build an app, and we got approached by King's College London and Bipolar UK to run then a beta. and an observational study to see actually if our app is going to be able to help psychiatrists to make better diagnoses and reduce also maybe medicine intake and helping people with bipolar with self-management. And as and so it was like, holy shit, this is sounded. It's actually started like this, and then I was digging more, and I realized that there is 1 billion people in the world with mental illness, diagnosed with mental illness. I like that. This is between like ADHD, bipolar, depression, schizophrenia, whatever, autism, right? And I was like, holy shit, this is actually a massive issue. And I also discovered that there is 40,000 people for one psychiatrist. Like, and right. So if you actually suffer from mental illness, psychiatrist is the only person that can give you medication, and access is pretty much nothing, right? And so yeah, so it started like this. So we are going to launch the app, not raising from venture. I think that Bipolar UK will be able to come in, and then maybe we'll bring some angels
and
just
grants. I'm sure you can get some grants as well, right?
We're thinking a different approach. Grants is like, it's super long.
Okay.
So we are speaking, this is kind of a bit of a scoop, but we are speaking with Paris Fury, which is the wife of Tyson Fury.
Okay.
Tyson is diagnosed with bipolar. So the idea of bringing some angel syndicates and some celebrities like Tyson to be angels investor at the same time to promote. But the objective right now is literally just for the next 6 months, just working with King's College London to prove that this thing can actually make a difference, right? And then once we have that, we'll figure it out.
That's cool. That's cool.
And to me, it's back to my roots because I'm a clinical psychologist, so it's kind of back to my
back
to
to the
stuff that I used to do.
Roots.
Yeah, back to my roots.
Amazing. All right, let's do a really quick fire round. So, what's a good book recommendation for SaaS founders?
What a book recommendation? Oh yeah, already said fundraising. The Guide to Fundraising from Carlos Espinal.
Okay, got it. All right, who's
that's good.
An entrepreneur leader you admire the most?
Oh, entrepreneur leader I admire the most. Oh, that's a good one. Andy Dunn, just because I discovered him recently. Andy Dunn from is the founder of Bonobo.
Okay, cool.
He wrote a book called as well Burn Rates, which is cool because it talks about his mental illness and mental health and funding Bonobo to 300 million. Yeah, like he really crushed. Like Bonobo is massive, right? And dealing with that, and how he was able to dealing with all of this. And he also talks about venture and the approach to mental health and stuff. I think it's a really good book. Yeah, that's a really good founder as well, and book as well.
Okay, what's a SaaS tool you use but not many other people know of?
What else do I use that not many people know? SaaS? What do you mean SaaS? For what? Specify.
Could be anything. Could be for your email outreach, your LinkedIn outreach, your whatever, any SaaS tool you or your team use.
Yeah, so recently, Hyperwrite, it's a plugin that works on Google Chrome, and it basically connects to it reads all your emails, right? So it's able to reproduce your voice. And literally, honestly, I tested it out, one click, and it just like composed the email. It goes so fast.
Amazing.
And then I use another one. I have like a workflow now that helped me so much. It's a plugin it's a Chrome extension called Whispers. And it allows you to use the Whispers API from OpenAI, and it works on OpenAI. It works on ChatGPT, on desktop, and you can talk. So I found that I now use ChatGPT on a talking level as a friend.
Interesting.
Because sometimes I just have these ideas and I just like blabber around. It's like, hey, but maybe I can do this, and then it just suddenly like that workflow has helped me so much in terms of like creating ideas, creating thoughts, or putting all my ideas together and just recording things.
That is cool.
And it's free as well. It's fully free.
Wow. All right. What's the Best advice you've ever received?
Best advice is the mo- I think it's not an advice. It's more like something that an old person told me like a long time ago, and I didn't believe him. It's like the problem in life. He told me the problem in life is that eventually, for people like you, you're always gonna get what you want, and that's the problem.
Deep.
And I can tell you why. It's like the moment I got everything I wanted is the moment where my life went crashing down.
It's a deep one. Okay,
And I
final
spoke to
one.
so many people like this, huh?
Final question.
As, yeah.
Who would you want to have as a guest on this podcast?
My good friend Michael Shine.
Okay, Michael Shine. All right, perfect. We'll make
Michael
that.
Shine, he wrote a book called The Hype Handbook, and he has studied for the last 20 years how to create hype and what makes a good and ethical hype artist, and the strategy that you can use in your business to create a brand that people will embrace just because they want to be part of this, like a cult brand. And I find he's not a SaaS guy, but I, from reading the book, every SaaS founder will have like a good framework to create something that it really changes people's perspective. Yeah.
Awesome. Look, Matteo, it's been super interesting, transparent, and honest,
Yeah, no worries.
vulnerable as well. So, all the best with the new,
Yeah, I
project
will.
venture. So, see you soon.
See you soon.
Thanks for sticking around. If you want to see the show notes, please go to nuoptima.com/SaaS podcast. Otherwise, see you at the next episode. Bye.